Hey guys, hello and welcome to this YouTube series. I'm Manisha Gupta and the conversation today is on gold prices, which have seen quite a bit of profit taking until now in 2021. Last year, gold prices gained 28% in dollar terms, 30% of gains in the rupee as a value also. But this year, until now in 2021, we have seen a decline of 11% in gold. When you see the gold prices from its highs of all-time high of $2,075 per ounce, we are trading at around $1,700 per ounce. So nearly $400 of a decline here. And then we seem to be breaking below those psychological important support levels of $1,700 per ounce also. The markets do believe that if we see a break of 1680, then the way perhaps opens up for 1650 on the lower side as well. So that would mean another 500, 700 to 1,000 rupees of a correction in gold prices in days to come. But then investors and charters believe that those levels would be quite critical and you could see some buying opportunities arise from that one. Well, the reason you have seen decline in gold, one is the strength in US dollar, which is trading at a multi-month highs. The reason for the dollar gain is that the US economy is recovering faster than what markets were earlier anticipating. The earlier expectation was that the global economy would recover perhaps by 2022, even 23. But with the kind of numbers, global economic data that we have seen, the expectation is that the recovery has been strong, the economic data is better, the stimulus measures have been supportive, the vaccine rollout has been faster, so the economies are opening up faster, and is the reason we have seen global equity markets run up, treasury yields gain up. The US dollar has been taking a lot of strength because of that too. The reason that you have seen prices go down a bit also has to do with the kind of buying that has declined. There are not too many physical buyers for gold right now. Yes, there were buyers when the gold prices were running higher. So there were actually more buyers when it was at 50,000 rupees in the Indian markets. At 45,000, 44,000 where the prices are right now, not too many people are buying because they're waiting for the prices to consolidate, or they expect that the prices could go down even more from here on. So that is the psyche that's playing in right now. The other thing that there are not too many buyers, even as the prices are quite mouth-watering, is because people have bought gold on the higher levels. One, they do not perhaps have too much money to start buying gold again at these lower levels. And people who have bought at higher levels, the advice to them really is to hang in, because the gold prices, the risk, as I said, is perhaps $50, 1,000 rupees down from here on, but the reward on the higher side is still quite firm there. So yes, the investors are advised to hang in right now at these levels. The other important thing, that the reason that you have seen decline is we also saw the ETF holdings in the global markets continue to see a decline. They are the lowest in last 10 months right now. We saw ETF redemptions in the fourth quarter of last year, and that clearly seems to be spilling over in the first quarter of this year as well. But once the prices are lucrative enough, it really is a cycle, We are looking at strength in US dollar, elevated treasury yields, the equity markets are running higher as well. But when you look at all of these things, the equity markets, the valuations do look stretched right now. So there would be a profit taking that you would see on that. The treasury yields are expected to peak out anytime soon. Once that cycle starts to begin, you will see this buying come back in case of the gold yet again. Also, markets are anticipating a $1.9 trillion of a stimulus coming in from US. That would be yet another incentive impetus for the gold prices from here on. The kind of world that we are working with right now, where you have a record level of debt, you have record low interest rates, you have record high stock valuations, and you also have record level of money that is being printed. All of this actually is supportive for gold. But at this point in time, because the risk appetite is on, you have seen the other asset classes do well, but the markets do not believe that that would last too long, perhaps a month or more, and then you will see gold prices come back in case of a favor here. Of course, gold does not pay any dividend, and at this point, investors have become attracted to higher bond yields, higher equity markets, but that markets believe is quite in the near term. We have seen the net long positions also continue to decline. So there are some people which are also shorting gold, which also will start reversing itself. So while yes, there could be some decline right now, as I said, in the global market, 1680, 1650 kind of levels is what you could be looking at. Most of the global central banks believe that yes, a huge surge surge or a new all-time highs in this year is not what they are looking at, but definitely levels of around 1725. Once that crosses on the higher side, it becomes lucrative to start going long in gold again. So 1725, once that crosses, look out for levels of 1750, 1800. That is what the markets are working with right now. In the Indian markets, we already have seen a break of 45,000 on the lower side. There is an expectation that 43,000 could be a good support level in the Indian markets. On the higher side, 47,000, 48,000 could be coming back in the next 5 or 6 months. So that is a range for the next 6 months working in for gold prices. If you are long in gold, do not panic, because the kind of world that we are in right now is supportive of gold. It's just that the cycle is yet to be completed, and by the time we reach gold, there is some risk also still remaining on the lower side. The momentum is still on the weaker side, and the gold is not oversold right now. It is not yet come to that RSI 14. That is usually a level that gold absolutely definitely does get bought into. So we are still a bit slightly away from that. But yes, gold could be coming back. It is not being written off right now. So if you have holdings in gold, be sure that you would see some recovery come back before we see the end of next quarter.